Hi, my name is Chris Brunis, the Ag and Natural Resources Educator in Ross County.
And I'm Larry Gerhardt, the Field Specialist in Taxation for OSU Extension.
And we're here today to talk about financial considerations of renewable energy on the farm.
Chris, let's go ahead and get into our materials.
Well, the first question people ask when they talk about on-farm energy is it economical? Most people will not invest in renewable solar energy unless it is financially feasible. And so let's look at the factors if renewable solar energy is financially feasible. There are several things that go into the thought process to make it financially feasible. One is the federal investment tax credit, depreciation options, the sale of the renewable energy credits, and then there are other tax considerations.
The federal tax credit is a big advantage to on-farm energy. It applies to both residential and commercial property, and it's equivalent to 30% of the cost of the alternative energy equipment. Now, if the credit exceeds the amount of tax that the taxpayer owes, the excess can be carried back 1 year and then forward for 20 years to ensure that the investment tax credit is entirely used up. Be careful, though, that there is a recapture on this investment tax credit. It's 100% if you fail to use the equipment within 1 year, and then reduces 20% per year after that for a period of 5 years. So if you do take advantage of this federal investment tax credit, it is wise to plan to use the equipment for at least 5 years. And by legislation, this federal investment tax credit is valid through 2016.
The other thing we need to look at is depreciation. And if we're putting this in for business property and not personal use, there are other tax or depreciation considerations. One would be the qualifying energy property is used for cost recovery in 5 years using the modified cost recovery system or makers. And so the depreciable basis is required to be reduced by 15% if we use the 30% investment tax credit as well. Now, for energy investment, Section 179 does not apply, but we did have a bonus depreciation that was in place, and if that is reauthorized, it could qualify for that tax credit. What is qualifying energy property? Well, to qualify for the business use, it is equipment that uses solar energy to either generate electricity, to heat or cool a structure, to provide hot water for use in a structure, or provide solar process heat, and that would be for uses other than a swimming pool.
One of the advantages of using renewable energy is the fact that renewable energy credits are tradable, and one credit is equal to 1 megawatt of electricity. A renewable energy credit that is created by solar is known as a solar renewable energy credit, or an SREC, as we call it. Now, energy suppliers can purchase these SRECs to comply with renewable energy requirements, or the credits can be sold to third-party aggregators if you do not want to handle the transaction personally. It is important for you to determine whether you are receiving the SRECs when you purchase the equipment, or whether the seller of the equipment has kept the SRECs and you don't have anything to sell. Now, these SRECs are traded on a market, and the value depends upon the supply and demand for the energy supplier. As time has gone by, the value of the SREC has decreased because now there are more of them available. But there is a value to the SREC, and it's important, again, to determine whether you're purchasing the SREC when you buy the equipment. Sometimes a purchaser wants to reduce the cost of the equipment and make it as low as possible, so the seller of the equipment keeps the SREC and the purchaser is buying it without the SREC included in the cost. Now you have to be careful because the sale of SRECs is a taxable transaction for income tax purposes and will be included in your income. Solar energy equipment is considered property used in energy conversion. That's a provision in the Ohio Revised Code. Once it receives that designation, it is 100% exempt from Ohio sales and use tax, personal property tax, and the corporate franchise tax. And in addition, since you are buying equipment, it's considered personal property and is not included in the value of real property for real property tax purposes. So in effect, the purchase of solar renewable energy equipment is exempt from Ohio taxes.
For more information, you can go to the website go.osu.edu/farm energy or contact either Larry or myself.
Thank you.